Yo, what is up, guys? We are on day 15 of the series and just come back from this little project we got. We are starting a business with a couple friends, and yeah, unexpectedly, I decided to find a trade today. Didn't think I was gonna try find one. So yeah, this is probably take off my indicators, but I guess you're gonna get a bit of a trade recap for today's video. And we did take an L on GU. Took 2 trades. I'll give a quick brief trade recap just because we haven't done anything chart related. But we'll turn off my session indicators and actually do a little breakdown. Okay. Yeah, it sucks that we took an L on this one, even though this was the better trade. But it doesn't matter, because that's happened. Okay. So, well, today's video is on Equilibrium, which I'll get into in a sec, but just for now, quick trade recap. So my original bias was bullish. Oh no, it was bearish to start off with, just because we swept these 4-hour highs. Same thing on GU, swept some 4-hour highs. But I noticed we have been trending up. I mean, it's slowing down just based off the candle's body. We know the bigger the body, the bigger the impact. But yeah, it'd be silly for me to not look for buys just because probabilities tell me we're going to be trending up. So what do? Start scaling in the 1 hour and find our confluences. And okay, this is where Equilibrium comes in. Got in the 4-hour, and it kind of explains why I lost. But okay, here we have our low and our high. Equilibrium. This is Equilibrium. We don't care about that 0.38. That's just preference. But here we see a low and a high. That's how Equilibrium is. And the whole point of Equilibrium is it's based off discount price. But we'll get into that in a sec. We have a fair value gap here, and I was like, oh, okay, we want to chase that, so I might as well wait off that. We tap into it, and I'm like, alright, nice. We've made an SMT, which again, something I'll get into very soon. But for now, and we see a break structure. You know what break structure is. I'm like, bet. We'll enter off that, target these areas of liquidity, which is the 4-hour high. I'm like, this looks like a good trade. And from there, we just start ripping it. Market size become an accordion and then stops us out. End of. But this was the first trade I took, which was on Euro, and we're currently down. Not down, but we are up 200 plus odd. I'm only risking 0.5%, which is normal, just low risk. We was up 200 odd. I don't know if the camera can pick that up. Now we're only like 60 up. So yeah, I mean, it sucks, but it's whatever. It happens. We have swept a lot of highs, but I might be a little too ambitious to be sweeping even more highs. But I think it's just a retracement, because we did get a break structure. We've got to retrace somehow and sometime, which will be done. So hopefully in about 40 seconds we start trending back up. Get a new candlestick. Yeah. See this SMT ski order block, which was a few episodes ago. Look, prior to the break structure here. I have our order block tapped in, and I was like, okay, I'm seeing some good rejection off that order block. So we enter. This one started rallying, which was really nice. That we entered, and I should have used this as my first and only TP, securing a 1 to 1.85, because come on, low RR, high probability of hitting TP, but maybe we've got a little too greedy and decided to, yeah, go for a higher RR. But yeah, the funded's not looking the best right now, but it's whatever. We're learning here, so it doesn't really matter. Because money comes and goes, you know? You don't gotta worry about that. Although this is very annoying. I've had the opportunity to close price here, and I didn't. But hey, that's like with everything. You know, you say you could have bought there, but you didn't. So that's on you. It's okay. Okay. Now let's get into the actual lesson of today, which is equilibrium. Oh. Equilibrium. Okay. What is equilibrium and why do we use it? This is our other confluence. So confluence to determine bias and get better entries. You may ask why. This is discount price. That's basically it is. All equilibrium is discount price. So let's say we hop into the charts. Market's moving away where in order for it to go higher, we must come down a bit. And equilibrium will help us find that area of discount price. And it's usually, because we use the Ganbox tool here. That's what it's called, by the way. Yeah, Ganbox. And you have to edit a couple of things. I'll do that now, you know, just so it's helpful. So we go here, right click, hit the settings, style. We keep this, you don't need. I just have that one. Sorry. Hold up. Right click, hit the settings. We need 0, 1, and 0.5. Don't need that. So yeah. And that will help us. Okay, never mind. That will help us find discount price. So and it's from one swing high to one swing low, or swing low to one swing high. So right now, as I'm in a trade, we can find discount price by identifying the swing high and the swing low. And that being here, so a low and a high. Sometimes it'll just wick discount price, or it'll actually go deep within discount price. But there, we can find ourselves going higher, hopefully. But equilibrium's best with high time frames. Like, let's say we go in the 4 hour. And we see ourselves. Okay, so this swing low to that swing high. Okay, you see that? Swing low, swing high. Before we actually go higher, as what the market does, we come down and we have price within discount in order for it to go up. And usually, this is when I know a trade's quite is very probable to be within our favour. Within equilibrium, we also have fair value gaps, which is, as we know, an imbalance within the market. Whoa, it just went really dark. I think it's going to rain soon. But yeah, within this, we have a fair value gap and equilibrium, which is discount price. That's what tells me we are in a very probable situation to be entering off. And from there, we enter within here, and we see ourselves going even higher. This trade's probably just hit break even, but it's whatever. Because, I mean, the funded's like 5% down. It's not... Okay, yeah, we've hit break even. No! Damn, I'm washed. Okay. Hit break even. P&L for the day is... We are down 90 for the day. Less than 0.5%. It's whatever. We move on. But, hey, I'm happy we actually, had an opportunity to enter off the market and predict price action, because it did sweep this high. We're just a little too ambitious and thinking it was going to sweep this high. Because liquidity is, I was asking a lot from the market in order for it to sweep them highs. I could have honestly humbled myself a little. Supposed to sweep this high or these equal highs, which it did sweep earlier. That I missed out on, which sucks. But hey, we don't get what we want to get. So let me show you the other trade. We had it all set up. Yeah, it sucks. But it happens, okay? Hopefully Trump rewards us in the future. Trust me, I'll be shorting the markets when the 90-day tariffs end. But yeah, back to equilibrium. We can delete. We'll keep this on for now. We'll go on GU. Yeah, this trade I lost horribly. Yeah, that is horror. I mean, why would I even think that we were gonna go higher if we had already swept loads of highs? That's very silly of me. I mean, I guess I just thought, just because all these lows. But yeah, let's delete that. Move on. Okay, this happened. So equilibrium. I mean, this is the potential for equilibrium right now. Look, swing low, swing high. Marking it out from the swing low, and we're doing it by the wicks. Okay? Look, precision. Wicks. Right now we're in discount price. Potentially a good time to be buying. Like I said, paired with a fair value gap. And that's why I have the other setting on, like 0.382. Because this is 0.5. Usually at 0.382 there is a fair value gap. So, good time to buy, I say. Obviously got stopped out by equilibrium because I didn't take into account that we were going to go into discount price. But, yeah. Okay, let's find some more examples. Okay, this is yeah, look, another one. Yeah. Swing low, swing high. I think we've already used example. No, we haven't. Looks familiar. No, we haven't. So look. There and there. Fair value gap. It's so simple. Yeah, it's so hard to execute off. But this gives us the confirmation to say, okay, you know what? I think market's going to go higher just because of this. we can use confluences with each other in order to have that confidence to trade. Because, hey, without practice, where do we get? So, yeah, let's find one example, or let's find a couple examples of the other way around. So, the other way around, it'd be a swing high to a swing low rather than a swing low to a swing high, because we want to find price and discount. So if we were to short the market, here, high, low, what do we have in it? We have one Vega there. Like I said, it's within the region. We tap into discount price, and what do? We sell off. Crazy sell off. It's very simple. Like, there'll be moments where we are in equilibrium and it will wick it. Like, look, we didn't even break past this high. Sometimes that's what we'll do. If we can mark out the high and the low within a market, look in between and notice, okay, where are we actually going to go? We get our direction. So, swing low to swing high. What do? Tap into equilibrium. Like, look at that. Wicked it. And we go higher. We just didn't break past these highs, which is fine, because, hey, we went low and then we went even higher. Look, another example, clear as day. High, low. Swing high, swing low. What do? Tap into equilibrium, rally off. It's just the way the market moves. Market won't move in a perfect uptrend. We have to find ways of going down before going up. It's like progress. Progress isn't a straight linear thing. We have to experience struggles within things before we go higher. Progress. And that's what equilibrium is. Okay? Simple. I think that's us for today. Hope you guys enjoyed it. I know it's a bit different to usual content, having these trade recaps, but hey, I haven't traded all week. First trade of the week, and we lost. But that's whatever. Probably the only trade of the week, just because Forex Factory. You know what that is now. We did have 4 red folders for today. 3 had already gone by. CPI. Don't think it was quite big actually. But hey, I don't trade London session. That's probably CPI right there. Yeah, not far off. No, it's 7 o'clock. CPI is here. CPI made a very big move up. And we had a 130. Alright, nothing major. Retail sales. You're not being annoying now with this trade. Because I know Seek and Destroy. Sometimes you'll enter off at a really good point. And you'll hit TP1, because that's what TP1 is. And then you'll get stopped out by a wick, or just barely. And it'll go higher, which I have a feeling for. So we'll find out in the next episode, which I will record later today. Just in advance, because, you know, yeah, I struggle having to record these every day. So, yeah. But your homework for today, 10 examples of equilibrium from, so that will be bullish, 10 examples of equilibrium. Bearish. Okay. Simple. Nothing more. Well, actually, do more. You know what? Do more, because it's an easy thing to... Yeah, that'll take you 2 minutes max. But yeah. Are you naughty boy? Okay. That's it for today. I might do some mini vlogs as well. You know, just little life updates. Because I've got something planned with the guys on the side of trading. Because, hey, this is like, as unstable as it is, I'd want to be doing something on the side, not just this. Because, hey, it only takes you 1 to 2 hours a day, max. This isn't something you're going to be putting a 9 to 5 in. So yeah, I'll see you guys on the next one. I'll be doing a psychology video and just wanting to see where this trade actually ends up. So that's it for today. I'll catch you on the next one. Take care of yourselves.